This is India's #1 news network, and you're watching News 9. English news as it should be.
Good morning, you're watching News 9. I'm Karthik Malhotra. Well, India has yesterday issued a stern diplomatic response to Pakistan, and that is the big story that we are tracking for you on the show this morning. Land borders are sealed. The Indus Water Treaty has been suspended. That is what we will tell you the details of on the show today. But also on the show, SENSEX yesterday, after 7 straight sessions of gains, has breached the 80,000 level once again. Is this rally going to sustain? That's a big question. We will try and get you an answer for. You are watching Morning Brief at 9. Begin with all the headlines that we are tracking for you on Morning Brief at 9 this morning. India closes land borders with Pakistan, suspends the Indus Water Treaty, a decisive diplomatic response to Pakistan-sponsored terror. Will a military action follow suit? That's the big question the country is awaiting an answer on. And in the wake of the PAHALGAM terror attack, corporate India expresses solidarity with the Indian people and backs government's action. Meanwhile, India's exports to Pakistan are now under a cloud. Remember, exports to Pakistan grew almost twofold between 2023 and 24. Now, the global stories that we're tracking for you. Trump and Zelensky clash once again over peace deal after Zelensky says that he may not be recognizing Russia's occupation of Ukraine. Meanwhile, reports coming in from the Wall Street Journal that US may likely cut tariffs on China by as much as from the existing 145% to just 50 to 55%. This after Trump's statements that he will not be playing hardball with China. And optimism on easing trade between US and China. The US markets bounce once again. Wall Street sees handsome gains with Nasdaq closing over 2.5%. Meanwhile, the dollar is at a 3-year low and gold prices have corrected. The Indian markets are not insulated from what's happening in the world. In response to the US markets racing, Indian markets also yesterday closed on the 7th straight day of gains. The SENSEX has breached 80,000. The question we are asking today is, will this rally sustain? And meanwhile, US tariffs may likely shave off as much as half a percentage point from India's GDP growth expectation. That's the word coming in from Finance Secretary Ajay Seth, who was speaking at Washington. And after a bit of a lull, some frenzy in the IPO season once again as Aether Energy opens its IPO for public subscription from April 28th to April 30th. Pahalgam terror attack continues to haunt every Indian, and that is the big story that we are tracking for you this Thursday morning. Well, meanwhile, India has suspended the Indus Water Treaty with Pakistan, sealing Wagah border and shutting border checkposts in sweeping diplomatic offensive on Pakistan after the Pahalgam terror attack that claimed as many as 28 lives. Now, India on Wednesday announced a series of sweeping diplomatic and strategic countermeasures against Pakistan. To begin with, Pakistani nationals have been barred from traveling to India under the SARC visa exemption scheme. Now, with all previously issued visas now declared void, those already present in India have been directed to leave the country within 48 hours. India will hold the 1960 Indus Water Treaty with Pakistan in abeyance with immediate effect. This is what Foreign Secretary Vikram Misri announced on Wednesday. Listen in to what he said.
In the briefing to the CCS, the cross-border linkages of the terrorist attack were brought out. It was noted that this attack came in the wake of the successful holding of the elections in the Union Territory and its steady progress towards economic growth and development. Recognizing the seriousness of this terrorist attack, the CCS decided upon the following measures. 1. The Indus Waters Treaty of 1960 will be held in abeyance with immediate effect until Pakistan credibly and irrevocably abjures its support for cross-border terrorism. 2. The integrated checkpost Atari will be closed with immediate effect. Those who have crossed over with valid endorsements may return through that route before 1 May 2025. 3. Pakistani nationals will not be permitted to travel to India under the SARC visa exemption scheme visas. Any SVES visas issued in the past to Pakistani nationals are deemed cancelled. Any Pakistani national currently in India under SVES visa has 48 hours to leave India. 4. The Defence, Military, Naval and Air advisors in the Pakistani High Commission in New Delhi are declared persona non grata. They have a week to leave India. India will be withdrawing its own Defence, Navy and Air advisors from the Indian High Commission in Islamabad. These posts in the respective High Commissions are deemed annulled. 5 support staff of the service advisors will also be withdrawn from both High Commissions. 5. The overall strength of the High Commissions will be brought down to 30 from the present 55 through further reductions to be effected by 1st May 2025. The CCS reviewed the overall security situation and directed all forces to maintain high vigil. It resolved that the perpetrators of this attack will be brought to justice and their sponsors held to account.
Well, what you just heard is part of a 5-pronged response that was decided upon after Prime Minister Narendra Modi chaired a meeting of the Cabinet Committee on Security or CCS in the aftermath of the terror strike in Pahalgam that left 28 dead. Now remember, 28 people, including 2 foreign tourists, were killed by a group of terrorists in one of the most deadly attacks on civilians in the meadows near Pahalgam, in the upper reaches of Pahalgam in Jammu and Kashmir on Tuesday afternoon. Now this is the first terror attack targeting civilians in years. Meanwhile, the Jammu and Kashmir government has announced a 10 lakh for each deceased family and 2 lakh rupees for those who are seriously injured. And staying with the story, terrorist attacks that threaten peace and stability must be dealt with utmost severity. And that's the message from industry leaders who have expressed grief at the loss of lives in the Pahalgam attack. Industry chambers and corporate leaders expressed solidarity with the citizens and the government, asserting that the nation is strong enough to deal with such crises and ensure that it does not disrupt livelihoods as well as economic activity. Let's take a look at what some of these corporate voices are. To begin with, let's look at what Sanjeev Puri, CII President and ITC Chairman, observed. He said that the senseless act of violence targeted on innocent people, mainly tourists, not only claims precious lives but also threatens peace and prosperity in the region. He asserted that safety of citizens is of paramount importance and terrorist attacks of this kind must be dealt with utmost severity. The nation is strong enough to deal with such crises and ensure that this does not disrupt livelihoods as well as economic activities. That's a word from Sanjeev Puri. Let's look at what Vedanta Chairman Anil Agarwal said in the terrorist attacks of PAHALGAM. He said, Kashmir is extremely unfortunate and sad state today. A deep sorrow has reached the heart of every Indian. May God give place in the lotus feet of the innocent people who lost their lives in the attack. He also expressed heartfelt condolences to the families of all the dead as well as those who are injured. Meanwhile, FICCI President Harshvardhan Agarwal said that India is deeply shocked and saddened by the horrific attack that has caused immeasurable suffering to dozens of families across the country. He also said that his thoughts and prayers are with the victims and their beloved ones during this moment of profound grief. He also said that the entire country stands united and both the central and state governments and others in this hour of national tragedy. Meanwhile, OYO founder and group CEO Ritesh Agarwal, in a post on X, said that what happened in Pahalgam has shaken something in all of us, a quiet, shared humanity. He also mentioned that to the families mourning today, your grief is not unseen. We stand beside you in silence and sorrow. That's the word coming in from the OYO founder. And of course, there is, as expected, a likely economic fallout also of building tensions between India and Pakistan and the potential escalation that may be seen in days or weeks to come. Now, India's exports to Pakistan reportedly reached a 5-year high of over $1.2 billion in 2024. The last time India's exports to Pakistan were higher was in 2018 at $2.35 billion, according to the UN Trade and Development and UN Comtrade data. Total goods trade between the neighbors more than doubled last year from $531 million recorded in 2023 to as high as $1.21 billion in 2024. Now, India's top exports to Pakistan include organic chemicals, pharmaceutical products, sugar, confectionery, as well as cotton. Meanwhile, Islamabad ships apparel, salt, sulfur, lime and cement to India, with India enjoying a handsome surplus with the debt-laden country that relies on support from multinational financial institutions for its own sustenance. Well, if you remember, after the 2019 Pulwama attack, India had raised tariffs to 200% on all goods imported from Pakistan, including fresh fruits, cement, petroleum products and mineral ore, along with withdrawing the most favored nation status from Pakistan. Now, India's exports to Pakistan jumped more than 300% in 2024 from 2020, according to a media report. With the trade route between India and Pakistan, the Atari-Wagah border now sealed and a potential escalation in the making, trade between the two countries will likely come to a standstill. And moving on now, the direct hit from tariffs introduced by Donald Trump's administration on India could shave off anywhere between 0.2 to 0.5 percentage points from India's GDP growth. This, according to Finance Secretary Ajay Seth. Now, Seth was speaking at the Hudson Institute event on the sidelines of the spring meetings of the International Monetary Fund and World Bank in Washington. Remember, this was the same that Finance Minister Nirmala Sitharaman had to walk out of early to be here in India. Now, Ajay Seth, the Finance Secretary, said that second-order effects would be important, referring to concerns that trade turmoil would slow global growth. He added that the expected potential growth rate of around 7% for India could be achieved over the next decade, though India needed to expand its economy at a rate faster to achieve its ambitious long-term targets. Ajay Seth also said that the delegation from India was in town to further negotiate on trade with the US administration, though he declined to give further details on what meetings were indeed planned. And staying with the United States, President Donald Trump has reiterated that the US will have a fair deal with China, adding further that the US and China were engaged in active negotiations on trade matters. This after some media reports, especially from the Wall Street Journal, claimed that the White House was considering lowering tariffs on imported Chinese goods to perhaps as low as 50 to 55% from the 145% in place right now. Take a look.
We are going to have a fair deal with China. It's going to be fair.
President Donald Trump told reporters outside the White House on Wednesday that the U.S. was still, quote, actively negotiating with China on trade. This after a source familiar with the matter said the White House is considering lowering tariffs on imported Chinese goods pending talks with Beijing. The source's comments followed a Wall Street Journal report that the White House is considering cutting its tariffs on Chinese imports in a bid to de-escalate tensions. Citing a White House official, the paper said China tariffs could come down from their current level of 145% to between 50 and 65%. Trump spoke with reporters at the White House, but did not address the specifics of the Journal report.
Everything's active. Everybody wants to be a part of what we're doing. They know that they can't get away with it any longer, but they're still going to do fine.
Earlier, in remarks at the Institute of International Finance, U.S. Treasury Secretary Scott Bessent said that high tariffs between the U.S. and China are not sustainable, and that Beijing needed to change tack.
There is an opportunity for a big deal here, that the U.S. is looking to rebalance to more manufacturing. The identity of that would be less consumption. If China is serious on less dependence on export-led manufacturing growth, and a rebalancing toward a domestic economy. I think they use the term dual circulation. Well, right now it's really singular circulation. And if they want to rebalance, let's do it together.
Bessent added that the third quarter of this year is a reasonable estimate for achieving clarity on the ultimate level of Trump's tariffs. In addition to steep tariffs on China, Trump has also imposed a blanket 10% tariff on all other U.S. imports and higher duties on steel, aluminum, and autos. He has also suspended targeted tariffs on dozens of other countries until July 9th and floated additional industry-specific levies on pharmaceuticals and semiconductors. That has roiled financial markets and raised fears of recession.
And in anticipation of easing trade tensions between US and China, all three Wall Street indices continued their green run for a second day in a row, with the Nasdaq Composite still closing above 2.5% in the green on Wednesday. This run has come in the wake of revived hopes for progress in the US-China trade dispute. But also added to the investor confidence was President Donald Trump soothing fears on his firing Fed Chair Jerome Powell, saying he has no intention on doing so. Here's a report.
Wall Street's main indexes closed higher for a second straight day on Wednesday, with the Dow gaining 1%, the S&P 500 adding nearly 1.7%, and the Nasdaq climbing 2.5%. Stocks gathered momentum after Treasury Secretary Scott Bessent said high tariffs between the U.S. and China were unsustainable, and President Donald Trump signaled he was open to easing trade tensions between the world's two largest economies. Sam Stovall is Chief Investment Strategist at CFRA Research.
I think this second day of an up market is really being propelled by possibly the unwinding of the uncertainty of this manufactured correction that drove the S&P 500 down 19% and the NASDAQ off more than 20%. Now we just have to see whether it is something that is going to be long lasting and rather just something that the administration is hoping for.
Trump also dialed back his attacks on the Federal Reserve, which included threats to fire Chair Jerome Powell. Most investors view the central bank chief as a stabilizing force in the market, which has been rattled by Trump's chaotic trade policy. Meanwhile, first quarter earnings season has hit full stride, with 110 companies in the S&P 500 having reported. Of those, 75% have beaten Wall Street estimates, according to LSEG. Tesla shares rose more than 5% after CEO Elon Musk said he would significantly scale back his work with the Trump administration to devote more time to running his companies. The stock gain came despite the EV maker posting a 1% plunge in quarterly net profit. Shares of Boeing surged 6% after the plane maker reported a smaller than expected quarterly loss and said it produced and delivered more aircraft. On the flip side, shares of General Dynamics dropped more than 3% after the aerospace and defense company said its business jet orders fell from the previous quarter, and despite posting a 27% increase in first quarter profit.
And with Wall Street high, the expectations were that the Indian markets would also open higher, but that doesn't seem to be the mood of the market. We will bring you the mood of the market in just a bit. But moving on right now, gold has extended its retreat on Wednesday from an all-time high as appetite for riskier assets has improved after US President Donald Trump said he has no plans of firing Fed Chair Jerome Powell and signaled progress with China on the tariff front. Now, spot gold slipped 2.2% to just a little over $3,300 an ounce after hitting a record high of as high as $3,500 per ounce in the previous session. Well, with that, we will slip into a short break, but coming up on the other side, we'll have Avinash Gorakshakar. The question we wanted to ask him this morning was if the 80,000s on levels on SENSEX would sustain and will the rally continue, but it seems markets are a little somber this morning. We'll try and understand what is drawing back the bulls from the Indian stock market. That and more on the other side. You are watching Morning Brief at 9.
I need expert performance. I need my career.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Presenting sponsor, Srinidhi University. Kindle the light within. Venue partner, Pulela Gopichand Badminton Academy, Hyderabad.
Welcome back. You're watching Morning Brief at 9. Let's bring you the mood on Dalal Street, and that mood seems somber, pretty much in sync with the mood of the nation this morning. SENSEX, which had touched the 80,000 levels and quite comfortably breached the 80,000 levels yesterday in trade, is retreating. It is down to about 79,959. Now, volatility, as you can see on your screens, has gone up by about 3%. This is the India Wix, the fear index, which it is referred to. It's now holding at about 16.4 levels. There is volatility in the market. There seems to be some sort of a fear in investors. What is the cause behind that fear? We will try and get answers to on the show today. Well, meanwhile, Nifty 50 still holding on above the 24,000 levels, even though it has taken a beating down about 0.2 of a percentage point, but holding comfortably above 24,000 levels at 24,277 at 9:20 a.m., 5 minutes after the Indian stock markets opened. Let's look at the Nifty 50 heat map and try and see which are the sectors which are leading the most this morning, and that seems to be the banking sector. HDFC Bank, ICICI Bank, both down more than half a percentage point in early trade. Remember, this is volatility playing in the Indian markets. The mood of the market could swing either ways, but at least in the first 7-8 minutes of trade this morning, it seems to be that the banking sector is reeling under some sort of pressure. Surprisingly, the IT sector is not responding well to the knock-on effect of the Nasdaq, which had closed 2.5 percentage points higher yesterday after US President Donald Trump signaled that there could be some easing of trade tension between US and China, but not much movement, in fact hardly any movement on the IT sector. Infosys is absolutely flat. TCS in fact is about 0.2% or so in trade this morning. HCL Tech, meanwhile, after a very strong earning report that came day before yesterday, the stock had rallied about 7% in trade yesterday. This morning, up about 0.5 percentage point or so. Meanwhile, other heavyweights, including ONGC, the oil major, is down about 1.1%. Bharti Airtel there started the day with about percentage point in losses, now down about 0.87%. That is the Nifty 50 heat map on your screens. Let's try and make sense of what is the mood of the market and why does the mood seem so somber this morning. Avinash Gorakshakar, Head of Research, Profit Mart Securities, joins me this morning. Avinash, good morning. Thank you for being here with us on News 9. Well, the question I wanted to ask you today was if the 80,000 levels on SENSEX would sustain, and it seems that markets had other plans for the day.
Yeah, good morning, Karthik. I think clearly markets are now going to be a little slow in moving up, at least initially, because I think whatever has happened in Kashmir, I think the markets are clearly aware that in the next few days or weeks, some retaliatory action could be taken. And I think, this is definitely something which was not expected at all. It has come as a big negative surprise for the markets. So for the time being, I think the markets would consolidate or may see a moderate kind of sell-off. Because, for the last 7 to 8 days also, markets had rallied significantly. So some part of profit booking and some part of a cautionary kind of, buying phase could be seen in the markets. But overall, I think, one thing is very clear that now the tariff issue seems to have got resolved. We could be possibly looking at, some other geopolitical factors, because tariffs are going to be more or less settled by the month of September. So I think net, Karthik, the markets today would definitely be a little cautious, and whatever news flows, come from the government as to how they are going to actually handle this issue is going to be very critical. So till that time, I think markets could get a small speed breaker and some profit booking could be seen, maybe today, tomorrow.
I'm just a little confused because US markets closed significantly higher yesterday, and usually there is a fairly coupled graph that can be plotted between what happens in the US and what happens in the rest of the world. But today, the fact that markets have opened softer, down about 0.2%, the broad indices in the morning, despite more than 2% gains in the US, that means the fear in the markets is fairly high, and that fear seems to be perhaps more, like you mentioned, more linked to what India's response to Pakistan would be. How much of this fear would you attribute to that, and how much of it would be other factors?
No, I think clearly almost 90% of the fear could be attributed to yesterday's development in Kashmir, Karthik, because as you rightly mentioned that, the global markets going up, the dollar index coming down, FI flows coming back, and the rupee stabilizing. These are all positive factors, and numbers which have come out in Q4 for most of the corporates have been slightly better than expectations. So I think, net, you're right. I mean, in case this issue was not to happen, I think the markets today would have opened on a strong note. I think there's no doubt about it. But I think this factor is now something which has come like a big negative surprise. And I think this is definitely something which, now nobody in the markets expected. So I think now going forward, it would be a little hazy as of now. But yes, I think longer term, the structural Indian story is looking very, very positive. I think we have been telling our clients that the markets have more or less bottomed out. The panic in the market is out. So over a period of some time, this issue would also be resolved, and markets would definitely again, start moving upwards.
All right. You also mentioned that because we've seen 7 straight sessions of gains, there could be some profit taking happening in trade this morning. Is it fair to assume that if profit taking is one of the reasons which is getting the markets to open lower and trade lower in early trade, then in the second half of the day, we could see some buying action as well?
Yeah, you could. I think, because my guess is that FIs have been now steadily buying in the cash market side. And I think a lot of domestic mutual funds, despite the overall number becoming showing negative. I think there have been a lot of good buying happening in good quality stocks because valuations are definitely now looking attractive. I think one has to see what kind of numbers come in the April to June quarter, Karthik. But at least on a date basis like this, I think maybe in the second half, obviously you could see some sort of buying coming in.
Hopefully some buying could come in the second half. But I want to draw your attention specifically to the energy sector, and energy sector seems to be reeling under some pressure this morning. ONGC is down more than 1%. Reliance is down about 0.7% trade right now. Avinash, could this also be a response to what J.D. Vance had expressed while he was in India, saying that India must up its energy imports from the US? Is that something which could be playing in on energy stocks, that we may be cutting back on the cheaper Russian oil and losing some sort of our dependence on the OPEC region, and we may be coaxed into buying Russian oil? I beg your pardon, US oil?
No, I think, Karthik, this is definitely not markets would possibly be a little apprehensive on how India decides its buying strategy for crude. See, I think very clearly India has followed a very strong diplomatic and a friendly approach to US. And I think the US market is also aware that India is a very large market, specifically for technology, for defense. So my sense is I think we'll have to wait for some time before we actually conclude on this factor. Oil from the US or whether it buys from Russia or the other OPEC countries. But nevertheless, the kind of buying seen in the oil, marketing companies, in the upstream companies was pretty sharp. So here also some profit booking could come in because, at $65 an average for crude, I think most of the oil marketing companies had moved up, considering that their GRMs could also improve. So some sort of profit booking was expected. So this is nothing to panic.
To panic, well, that is a word of reassurance coming in. I want to specifically now draw your attention to the IT sector, and the IT sector which is completely linked to what happens in the US and maybe relatively less impacted by way of what happens between India and Pakistan as and when it does. Of course, we have seen the tensions build, at least diplomatically, but we haven't really seen anything or heard anything on the military front just until now. But Avinash, on the IT sector specifically, results have been fairly decent. HCL yesterday rallied about 7%. So I understand that particular stock could be taking in some profits in trade this morning. But beyond that, the other companies, the big five in the IT space, also reeling under some sort of a pressure. Why is that so?
No, I think, if you see the quarterly numbers, Karthik, obviously, is HCL Tech, as you rightly pointed out, their numbers were much better than other companies like TCS, Infosys, Wipro. And I think the factor which actually helped the stock move up was the guidance. I think unlike Infosys, which, guided for a negative growth, Wipro also downgraded its guidance FY26. I think markets want some sort of visibility for growth. And I think that was very clear from the management commentary of HCL Tech. Overall, I think we'll have to probably wait for another 1 or 2 quarters before we see some sort of large order wins from the US market, which is a large market for Indian companies. We are positive, Karthik, on the smaller companies. Persistent has come out with good numbers. KPIT Technologies is another company. So I think maybe in the larger companies, it may take a little more time for the order win cycle to actually crystallize into numbers. So we are positive on the sector. This is a sector where you would definitely find India a very large kind of partner to the US. But maybe in terms of earnings numbers, you'll have to wait for a couple of quarters. So we are structurally positive, but we would be positive on stocks like Persistent and KPIT.
Right, Persistent and KPIT are some of the positive stocks coming in from Avinash. Avinash, I also want to understand from you what happens to the mood, not just of the Indian investors, but even foreign money that potentially could flow into India or could be paused from coming into India in the wake of potential escalation between India and Pakistan. How will foreign investors react to an escalation if it happens?
No, I think my guess is that, foreign investors have got complete faith in the current government. And I think, even yesterday after this event happened, there were a lot of condolence messages sent to the Prime Minister, stating that this event was definitely not something which most of the countries had liked. And most importantly, I think the markets are definitely going to be volatile. No one likes, escalation in the relationships of any country. But I think FIs would also observe these factors very closely. Maybe they could pause for a few weeks, but I think nevertheless the India story is very large, and I think the currency has now stabilized. That itself is a very big indicator that they can't ignore India as a growth market. So I think with the tariff issue going on, I think India is now one of those markets where everybody wants to come and invest in India because growth is plenty, and I think we have a very good structural policy to encourage investment. So I think net short term, yes, the trend could be little affected, but longer term, I am not worried. I think this thing will also go away.
All right. I'm not sure, Avinash, if you have a view on gold or not, but that is again a commodity which has been making headlines last many days. So I want to get your view on gold specifically now that prices have come, at least in dollar terms, off lows. It was once at about $3,500. It is now down to about $3,300 per ounce. And gold, as we know, is calculated in USD. The dollar index is weak. The Indian currency then becomes a little more palatable to purchase gold at more reasonable prices. But in that context, we've seen the gold rally also at some level lose its sheen. Now, do you believe this is the buy on dips opportunity for gold, or you think gold prices could correct even further down from here?
No, I think, clearly till the time the tariff issue is not resolved and, there's uncertainty, on this major issue, I think gold will continue to rise because gold has clearly risen because of this factor, because uncertainty has been very high. And I think, for investors who want to buy gold, I think this is definitely looking to be an expensive kind of level. The gold price has moved quite significantly, but I think obviously for traders, they could enjoy the volatility and make some momentum gains here. From a industry perspective, I think, the gold jewelry companies, Karthik, could be in a problem because for them, the main raw material gold is going to be expensive. And I think passing through this cost immediately in totality to the customers is not going to be an easy task. On the other hand, gold finance companies in India like Muthoot or Manappuram, they could possibly be beneficiaries because the loan to value improves. And I think demand, for the gold finance market in India is quite healthy. I would say that, somebody who has already bought gold can hang on, but fresh buying at these levels, I think one has to be a little careful because clearly the markets would be very volatile going forward.
All right. And I also want to understand from you, Avinash, I'll take this opportunity while you're here with us that hypothetically, whatever Donald Trump does is likely to be in the interest of his America First policy, is likely to have a positive impact on the US markets, barring, of course, that probability of US going into recession. Is it a good time, given the uncertainty in India with respect to how tensions could escalate? Is this a good time for Indian investors to also dabble into US stocks?
So I think clearly, somebody who has already invested in the Indian asset class in a big way and wants to diversify could definitely look at some of the US companies because, my sense is Donald Trump would not make a blunder to ensure that the US economy goes into a recession. He has already started negotiating with most of the trading countries and I think some solution will be worked out. So to that extent, I think one can take a small bet on some of the larger US companies. And I think clearly, of course, the return expectations have to be moderate because unlike emerging markets like India, there the risk reward could be relatively lower.
Right, the risk reward as compared to India could be lower. That's the view coming in on the US stock markets and Indian investors who may be looking into dabbling in US stocks. So stock selection is going to be critical. That is the word coming in from Avinash Gorak. Meanwhile, the Indian stock markets have recovered. So, Avinash, could this have then just been a case of profit taking in early trade? SENSEX is now pretty much flat, back to yesterday's level of about 80,150. Meanwhile, Nifty 50 is also up. Second decimal points, but up nonetheless. The mood of the market has changed in the first 20 minutes or so of markets opening. Nifty 50 at 24,352 levels. Volatility has also eased. We started the day with about 3% higher on volatility. It's now down to about 2.17 if my eyes are helping me right. So Avinash, could it have just been a case of great gains over 7 days? Let's make some money and put the money back into the markets.
No, I think, clearly the markets are confident that the present government would obviously take a very decisive call against this, this issue which happened yesterday. And I think, markets are obviously going to be slaves of earnings. So I think barring this factor, and now the markets have understood that global challenges would continue to remain. I think India and most of the other countries will have to live with tariffs. And I think India is a very well-positioned, strong, growing market. So I think, ultimately, you make money from stocks, and if you get stocks at reasonably good valuations, I think money flow is going to come in. So I think, what we saw in the morning was a little bit of panic, but I think markets have settled down. And I think unless, some major event happens, which could possibly trigger a further escalation between India and Pakistan, then only I think markets would correct significantly. So till that time, I think, the markets have realized that it's better to be positive, and any dip is being used as an opportunity to accumulate.
All right. And Avinash, I will get your view on Aether Energy as well, which is coming up with its IPO. In fact, Aether Energy driving into the IPO game, becoming this year's first EV maker to hit the public market. Now, the issue will be open for subscription from April 28th to April 30th, with anchor bidding kicking off tomorrow, April 25th. Now, the company has priced an issue in the range of 304 to 321 rupees per share, looking to raise as much as 2,600 crore rupees in a fresh issue. Founders Tarun Mehta and Swapnil Jain are cashing out a total of 19.6 lakh shares between them, 9.8 lakh shares each, and looking at walking out with 15x returns or so, which could help them pocket a cool 31 crore rupees. Aether Energy, Avinash, any view on this company? We've seen what has happened with Ola Electric. This is a new company coming in the same category. What would you recommend to those who want to go ahead and subscribe to this IPO?
Well, I think clearly, Karthik, this is IPO meant for very high risk investors, because as you rightly mentioned, this is not a profit making company. It still has a loss making kind of trajectory. And I think the product is well established. There's no doubt about it. The promoter background is very good. But in this market, when the existing promoters want to cash out, and obviously these valuations are not cheap, I think they are fair to expensive, at least looking at the current numbers. Of course, the future is positive. My sense is that somebody who wants a momentum gain could try a little bit in this IPO, but somebody who's looking to invest in this IPO should keep away. It's better to wait for the IPO to list in the secondary market, understand how the company's operations are. Then you get to hear the management commentary. Looking at Ola Electric, I think it's clearly very well understood that these kind of new generation companies, will take a little bit of time to stabilize and generate cash flow. So at least new investors who want to invest money should keep away. Maybe people who want a listing gain could try their luck.
All right, investors to stay away. Listing gains may go and opt. Avinash Karakshakar, always a pleasure having you here on News9. Thank you for joining us. Well, we will slip into a short break, but before that, let's look at some of the global headlines that we have been tracking for you on Monetary Fact 9. US President Donald Trump has expressed his desire to continue receiving the services of Elon Musk in the White House a day after Tesla chief said he will significantly cut back his role in the US government after Tesla reported a huge drop in profit and sales. Meanwhile, Donald Trump has also announced that the 25% tariff imposed on Canadian cars imported to the US could go up even further. And it seems Trump and Zelensky have clashed again, this time over the progress on efforts to end the 3-year-old war in Ukraine. A poll shows that approval ratings of Donald Trump are now at just 37%, down from his first days in presidency, in which he promised to bring about a golden age for America. European Union regulators fine Apple and Meta for violating a new law intended to increase competition in the digital economy. Apple fined $570 million and Meta gets a slap of $228 million in breach of EU law. And we told you before, we are telling you again, gold has extended its retreat on Wednesday from an all-time high as appetite for riskier assets improved after US President Donald Trump said he has no intention of firing Fed Chair Jerome Powell. China's Huawei Technologies is preparing to launch mass shipments of its new 910C artificial intelligence chips as early as next month, offering Chinese AI firms a vital alternative to NVIDIA. Meanwhile, US aircraft maker Boeing has reported a smaller than expected quarterly loss on Wednesday as the US maker produced and delivered more jets after a quality crisis and crippling strikes shuttered production for most of 2024. And CEOs from pharma major Novo Nordisk and Sanofi lambast EU price control. Bosses of leading pharma firms are urging the EU to allow them to increase medicine prices amid uncertainty over tariffs. These stories and more you are watching Morning Brief at 9.
Coffee?
आइडिया कूल। ये एयर कंडीशनर नहीं, AI कंडीशनर है।
Beyond better, the new Tiguan R line. Volkswagen.
News9 Corporate Badminton Championships in collaboration with Pullela Gopichand Badminton Foundation is here for all of you to experience the passion and network. This is a great opportunity to experience your childhood memories and also be part of a corporate event which enhances sportsman spirit in all of us. Wishing you all the best and hope to see you here.
Presenting sponsor, Srinidhi University, Kindle the Light Within. Venue partner, Pullela Gopichand Badminton Academy, Hyderabad.
Welcome back. You are watching Morning Brief at 9. Let's bring you some of the top global stories that we're tracking for you this Thursday morning. Tesla chief Elon Musk has pledged to significantly cut back his role in the US government after the electric car firm reported a huge drop in profit and sales for the start of this year. Musk has led the newly created advisory body, the Department of Government Efficiency or DOGE, since last year, putting the world's richest man at the heart of cutting US spending on jobs. But Musk said his time allocation to DOGE would drop significantly from next month, adding he will spend only 1 to 2 days per week on it after accusations he has taken his focus off Tesla. Now, just a day after Elon Musk's announcement, US President Donald Trump expressed his desire to continue receiving the services of the Tesla boss in the White House.
The plants, the car plants that are being built. And I'd rather see them made in Michigan and made in South Carolina and made in different states, Tennessee. Well, first of all, I can't speak more highly about any individual. He's an incredible guy. He's a brilliant guy. He's a wonderful person. I've seen him with his family. I've seen him with a lot of his children. He's got a lot of children. He treats them good. He loves his children. But he's a brilliant guy. And he was a tremendous help, both in the campaign and in what he's done with DOGE. And, you know, we're talking about almost $200 billion and rising fast, because many of the things that we were looking at are now being found out to be fact. It's terrible. I mean, the fraud, the waste, the abuse, everything that's happened is just terrible. So I also know that he was treated very unfairly by I guess you'd call it the public, by some of the public, not by all of it. I say he makes an incredible car, everything he does is good, but they took it out on Tesla. And I just thought it was so unfair because he's trying to help the country. But he has helped the country. I also want him to make sure that he's going to be in great shape. And I know he is. I mean, he's going to do great. He loves the country. He didn't need to do this. He did it. And
All right, President Donald Trump there talking about the role that Elon Musk has played in shaping Dodge and working for the United States. Meanwhile, Trump has also announced that the 25% tariff imposed on Canadian cars imported into the US could go up even further. He believes that it has been costing $200 billion a year supporting China, and it is an unnecessary expenditure. Listen in.
They have some energy selling gasoline for less than $2 in a couple of states. In Alabama, a couple of...
An election coming up. How do you have a prediction for that, and what do you think the results of
with respect to Canada?
With the negotiations?
Oh, I don't want to predict other nations' elections. It's tough enough doing this one. Look, I love the Canadian people. I like Canada, but it's costing us $200 billion a year to support Canada. $200 billion. And I say, why are we doing that? You know what? We can make our own cars. We have more energy than they do. We have more energy than anybody in the world. We don't need their lumber, obviously. We have more lumber. We have a lot of lumber. We have a lot of everything that they sell us. But in particular cars, they took a large percentage of the car making, and I want to bring it back to this country. I really don't want cars from Canada.
Well, Donald Trump doesn't want cars from Canada is the word coming in. Meanwhile, Donald Trump and Ukrainian President Volodymyr Zelensky have clashed one more time, this time on the progress on efforts to end the 3-year-old war in Ukraine. Now, President Trump chided Zelensky on Wednesday for refusing to recognize Russia's occupation of Crimea. More details in this report.
U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky clashed again on Wednesday on efforts to end the 3-year-old war in Ukraine. Trump chided Zelensky in a Truth Social post for refusing to recognize Russia's occupation of Crimea. He said the territory was lost years ago and, quote, is not even a point of discussion. White House spokesperson Caroline Leavitt elaborated in comments to reporters.
The president's frustrated. His patience is running very thin. He wants to do what's right for the world. He wants to see peace. He wants to see the killing stopped. But you need both sides of the war willing to do that. And unfortunately, President Zelensky seems to be moving in the wrong direction.
Zelensky said this week that Ukraine will not recognize Russia's annexation of Crimea, saying, quote, there's nothing to talk about here. This is against our Constitution. His chief of staff said in a post on X that he stressed to the U.S. in talks Wednesday that Ukraine will stand firm on its principles regarding sovereignty and territorial integrity. Nevertheless, Ukraine's foreign minister said after those discussions that Kyiv was committed to working with the U.S. to achieve peace.
Well, the artificial drive seems to be in top gear in China, with humanoid robots raced against humans for the first time in a half marathon in China's Beijing. Elsewhere, Huawei plans to begin mass shipments of its advanced AI chips to Chinese customers as an alternative to Nvidia. Let's take a look at all the AI stories.
From Huawei's plans for China to humanoid robots racing in a half marathon. This is AI Weekly. Huawei plans to begin mass shipments of its advanced AI chips to Chinese customers as early as next month. That's according to two people familiar with the matter, who added some shipments have already been made. China is scrambling to find a domestic replacement for Nvidia's H2O chip. The Silicon Valley giant had until recently been able to sell the chip freely in the Chinese market. Meta Platform says it's expanding access to its AI assistant on Ray-Ban smart glasses to 7 additional European countries. That will allow people in Germany, Austria, Belgium, and others to interact with Meta AI using voice prompts to get answers to general questions, the company said. The Facebook and Instagram parent launched its AI technology in Europe in March, after a delay over data protection and privacy concerns. A report from the International Monetary Fund says the economic gains from artificial intelligence will likely outweigh the costs of rising carbon emissions by the data centers needed to run AI models. The IMF says AI will boost global output by around 0.5% a year between 2025 and 2030, but noted that those gains would not be shared equally across the world. Take-up of AI is expected to drive a surge in demand for energy-intensive data processing power in the coming years. even as the world struggles to keep promises on reducing emissions. Humanoid robots raced against humans for the first time in a half marathon in China's Beijing. The race drew crowds of spectators, including Hersey Xu, who works in the artificial intelligence field.
There's a kind of sportsmanship, whether it's humans or robots. They are all exercising. It feels like I'm watching the development of machines, the development of AI.
The winning robot, Tiangong Ultra, finished in 2 hours and 40 minutes, a long way off from the men's winner, who finished in just over an hour.
And finally, US plane maker Boeing seems to show some signs of recovery after what can be best described as a brutal 2024. The aircraft manufacturing giant reported a lower than expected quarterly loss after it produced and delivered more jets. Boeing reported an adjusted loss of 49% per share during the first quarter. Its revenue also rose 18% to $19.5 billion in the quarter through March, slightly above expectations. And as we come to a close of morning brief at 9, let's quickly look at the volatile Indian markets this morning. Remember, the trade has been extremely choppy. The SENSEX, which closed above 80,000 yesterday, started the day with losses of about 0.2%, coming to the 79,900 odd levels. Then, of course, it bounced back and recovered some of those losses, paired those losses, and inched up again to about 80,000. And in just about 40 minutes since the markets have opened, less than that, in fact, about 35 minutes since the markets have opened, Sensex is now down about 0.26%, inching even lower at about 79,900 odd levels. Remember, when the markets opened, volatility was just about 2.99% higher. That is the fear index, which gauges how volatile the trading during the day is. It's now as high as 3.6%, standing at about 16.58%. Let's look at the Sensex chart for the day, and this is the kind of volatility that we have seen. Markets opened from yesterday's close at above 80,000 levels. It tanked significantly down to about 79,500 levels in the first few minutes of trading at exactly 10:55 or so, and then it has seen a little bit of up down. The trajectory had been up, but just the last 5 minutes or so it has tanked down again, this time now well below the 79,950 levels. At this moment, Sensex is at 79,949 or so. It is a volatile day. There is some profit taking, and what Avinash Gorakshakar was also telling us earlier in the show, that there could be fear on account of India's expected action against Pakistan. Well, we will leave you with that for now, and we come to a close of morning brief at 9, but news and updates will continue right here on News9. Thank you very much for watching, but do stay tuned.
Living. I need my career.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed, and supremacy.